Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining me today. Hope you're doing fantastic. Today, we're going to be diving into the latest Bitcoin developments on price action and explore how we can revise the wave counts based on our prior analysis. As I must cater to both the bulls and bears, I hope my analysis shows a neutral approach to help build your own thesis on the bearish or bullish outcome. Now, many structures have changed since we breached the baseline support, now turned resistance, but some of them still do align with many of the hybrid scenarios I've discussed while also introducing us to new wave counts. But does the bullish interpretation still exist? Absolutely. Until major invalidations occur, we can keep readjusting until needed. Due to the fact that we're creating a lot of overlapping structures, it still gives us the idea or the sense that we may be creating some overlapping structures, either as a combo or possibly as this diagonal scenario. So without further ado, here is our first scenario. The idea of the diagonal, we can have this labeled as a 1, 2, 3, 4 as a triangle, and then 5 into an A wave. So this would be our actionary wave. And then instead of having this idea or utilizing this overall idea where wave B or wave X goes into the 90% region and labeling this as a possible flat, we can alternatively now, since we breached the lows, say that this is just a deeper B wave. So we can remove all of those market inefficiencies, all of that subjectivity in mind as a B wave. Now, but there is something to worth that is noting, which is if you're labeling this as a possible W, as a possible wave X, and now a possible wave Y, this is now becoming a zigzag, and this ABC here is now overlapping with that idea where wave X is now breaching the 70% or the 61.8% zone of the Fibonacci retracement, and we're going into that 90% zone. That gives us that really tricky hybridness of that possibility that X wave is now creating some kind of combination idea, right? Because we are still working with the equilibrium zone in this zone. So if we wanted to ideally say that this is a zigzag, you can't have two zigzags within a wave W and a wave Y. So ideally, we want to remove that inconsistency in mind, and it's an easy fix. All we have to do is replace this WXY as a possible double zigzag. We want to alternatively say, due to the subjectivity nature in that matter, is that we just remove this and label this as a possible actionary wave going into wave A, and then a deeper B wave, and then we can talk about how the C wave is going to be developing, and it looks like it's developing into a possible diagonal idea where wave 1, 2, 3 is now possibly in play. Now, what we have here, based on the Fibonacci ratio of the current drop, is that we did create a very nice looking A wave into a short B and then into a very deep C wave, giving us a relatively good look since this retracement was so deep. Now, what does that mean? The ratios between wave A and wave C is we just hit that 1.618 at the time of recording on the spot. So we can assume at the time of recording, again, is that this could be the bottom of a subwave 3. And if we move up in a 3-wave fashion back into the territory of wave 1, we can label this as a possible wave 4 if we do get rejected by the 786 or the 886 or even the 618 zone, and then come back down for another 3-wave, either as a truncation or at the trend line or a possible small overshoot before we go back out of here, and that could be labeled as our bottom wave 4. Now, speaking of WXYs that we have talked about, due to this idea, it's just a small educational idea in terms of what you can expect, is that wave W, you ideally want to be working in a channel. So if you're working with an ABC for a W, you want to be creating some kind of channeling idea. So that channel idea, the reason why we don't want to be labeling this as double zigzag possibility, and the fact that we did hit the 90%, and the fact that it's not really respecting the ideas of a channel, is that even though X wave can breach the channeling perspective of that A wave or ABC, it can go breach this channeling. It's just that it's unlikely if wave X surpasses the 618 or 0.7. So you ideally want to be working with some kind of A-B idea in that case. And if we are going to be working with a WX, then you ideally want to be working on some kind of combination idea. So that's that. Now, if we go on to our second scenario, this is utilizing the idea of that 90% because now we can label this as an ABC flat, right? So if this is labeled as an ABC flat, this could be the beginning of our combination structure, which leads us into wave W. Now, it's too early to call, but we are now starting to see a little bit more data that we may be working in a B expanded pocket zone going into that 1382 and the 1236 zone for this possible 3-wave into A, 3-wave into ABC of this B wave of a primary degree. And like I said, thank God we actually were able to call that this was a 3-wave move instead of a 5-wave move. I think there was a lot of common mistakes. A lot of people were seeing this as a 5-wave move, but it was a short B wave, and it is what it is. So we went into a wave A and then a sharp C wave, and that brings us into that 1382 and 1236 zone. That's pretty much the maximum. I'm going to start accepting it, ladies and gentlemen, going forward. I don't want to say that anymore, that we're going into the 1618, because we did fail at these regions here at the 1618 for a possible 1-2 flat, where B wave was extended into that B pocket zone. But again, usually those are played in hindsight. We have usually different alternatives at that point. But at this time of recording, we do have that 1382 tagged very nicely. Even this ratio of this A to C is at that 1618, which aligns very nicely with that 1382 zone. So what's next? We're looking for a possible C wave of this expanded flat idea that brings us into the equilibrium zone of this possible combination factor. And then we have this X wave being printed, most preferably, probably most likely. And what we want is into that 70% zone. And then we want to come back down as a possible zigzag due to the idea that we are working in a combination. And remember, like I said, you can't have two zigzags in play. We're lucky is because this was deemed as a flat. So that original narrative where what I just talked about, where this is looking like it's not possible, is now possibly utilized into this idea of being a flat. And now we have a flat structure for this. And the last leg for a wave Y, you want to be looking for a zigzag or a triangle or a flat. But again, a flat or a zigzag in this idea just seems a little more unlikely, as we want to be working in some kind of equilibrium zone. So that's that. Again, that triangle idea as well is a possibility where we come up, and then we have to assume all of these triangles have to be with wave threes, and that's just way too early. And triangles, even in hindsight, only play out because they've played out. That's it. There's no, even with all of these subwaves, even with the BD trendline or AC trendline being developed quite nicely, a lot of them have failed because another trial and error. We did see a lot of triangles, or a triangle trying to be built up in this region here before, but that failed as well, where we tried to, label this as a triangle, so forth. So that's that. And I guess there's another possibility. I'm just entertaining this idea because it's just for educational purposes. I think a lot of people don't know too much about WXY combos and the Fibonacci ratios applied to it. So I'm just going to try and give you a little bit more insight on what we can possibly see. I have never personally seen Bitcoin do this. Usually these, in my opinion, I think it should be reworded where wave threes and wave 3/4s have more combination patterns, just due to the fact that it's sideways. But I have seen more wave 1/2s within the Forex markets for the past 10 years. I've gone back and done a lot of back testing that wave 1 and 2s usually create more combination patterns due to that accumulative phase that you're looking for in wave 1, 2. So if we're creating another accumulative pattern, again, it doesn't matter if we're in a 1, 2, or a 3, 4. What's important here is that we have a possible flat or ABC. We could be looking into an X, and instead of having that X wave here, what we can do is utilize this as a 3-wave move, and then this as the flat idea. You see what I did there? Yeah, it's interesting, right? So what we can do is we can utilize this and then have this as the flat for wave Y, have another flat for this XX, and then another possible flat for a Z. So this will create that overall equilibrium zone just as likely. If this were to play out, this would be a very, very tight zone to work with. So that's the triple combo idea. And then the unlikely scenario is that we create another triangle of some sort. I don't think this is going to be a possibility. So this is out of the idea. Someone shared that idea, so I don't want to share that here. There is now the possibility that we are in an impulse due to the fact that we broke support, right? So this idea is for the bears. Now, this idea shouldn't be for the bulls because this idea is very, very bearish. And this works on the idea of the hybrid idea of the actionary wave of wave 1 or wave A, the same idea for wave 2 or a B that we originally had. We were labeling this as a 1, 2 now as a larger structure of the degree of the intermediate degree. And this whole move down was part of that wave 1, same idea, because again, actionary waves do overlap with each other in terms of the mode of structure. And then we have this ABC that's similar in every scenario. And then we have that as a smaller degree, wave 1, 2 of the minor degree. And then now we're working in this 1, 2, 3, 4, 5, possibly getting supported within this region here. And then that can give us a little bit of leeway for a wave 3, 4 being built. And then another 5 wave into the intermediate degree for 3, 4, 5. And then look at that. It may be creating some kind of parallel channel again, right? That channeling structure, and then we create that 5 wave for that primary wave 1. And if we zoom out even further, that helps us build a little bit of more of that narrative. And if we do continue as an impulse to the downside for whatever reason, maybe bad news or continued black swan events or some sort, it's absolutely possible. Then that could be our first wave A or wave 1 into that primary degree of the larger move of this flat to the downside. Whether this is going to be 1, 2, 3, 4, 5 as a running flat, it could be going into an expanded flat as well, since the B wave has reached that 101% up until any point of the 138%. I like this idea of the being expanded flat idea as a 5 wave move down, and all together this is going to be the ultimate bearish scenario where we just get rejected completely and come back down. Now, this is way too early to call. I don't know why there's so many people who are calling these bearish moves way too early, and they all of a sudden swap and just use this drop as their advantage of creating a narrative or building engagement. I think that's a bad approach in my opinion. So please try not to be too bearish. You want to work level by level, because there are levels of support that we need to talk about, which I'm going to be talking about now. Because if we resort to normal technical analysis based on channeling and the Elliott wave channeling technique, and also on moving averages and momentum indicators, what we can do is you're using the original channel as now as a readjusted possible channel, where this was a top and we're working for a possible wave 4 of some sort. Now, the problem is that our original channel, where we had this as a wave 3 of some sort, is that we're now getting retested on this pivotal move that we originally had of this reference points of 1, 2, and possibly 3, A, B, or C as well. This is now breaking back into this channel. But if you do a smaller readjustment using wick to wick and candle to candle, what we can do is, if we use candle to candle, we can say that approximately we're still being supported above this channel, meaning that we did wick above it and we came back and retested this median channel at that time without readjustment. But if we keep this upmost original channel, we can say that we're still retesting channel. So if we do get supported here, and even on the adjusted channel, we can also assume that it comes back up and gets retested before we come back out if you're a bull. Right now, if you're a bear and we continue the impulsive scenario down, this level, like I said, is most likely going to be that 1, 2, 3, and then 4, and then 5, eventually breaching that median line of this original parallel channel. And that'll be that first wave 1 coming possibly back up into the median channel, 2, and then eventually breaking this whole channel altogether as a wave 3. So that's how we could be looking at that. Now, there are some moving averages that are also showing support. The only moving averages that I use, because they are intertwined with each other, is a 20, 100, and the 200 moving average, as they do a very fantastic job on the overall trending markets, right? So if we look at the 20 moving average, it doesn't work so well on the daily chart. So the daily chart and the weekly chart is what we want to be looking at in terms of the overall supports. Now, this 100 moving average usually gives us support or some kind of idea of an immediate breach, and then whether we're in a trending move or not, as some kind of support. This was our first breaker and support that we came back and we went all the way up to continuing that bull market. But now we're retesting a second time, and at this time of recording, looks like it's going to be closing below it, but we still have 12 hours or so before the daily closes. If we look back at the previous bear market, you can see this was trending right below the 100 moving average, and that 100 moving average was a very important resistance, eventually breaking above and then becoming support on that 100 moving average, right? So if we kind of reduce the cluster, you can see that 100 moving average is pretty much the most important one. We briefly broke above this, came back, retested again, and that was our bearish signal. But for now, if we do the same kind of similar idea where we might break below and then come up and then retest that 100 moving average, that could be an opportunity for us to continue on. So that's one way to do it, but we are still seeing some temporary pressure on that 20 moving average, but nothing too important of that. But when we do move into the weekly average, the 20 moving average becomes a little bit more wacky, and then again, but we do still see some kind of price reaction. But we are now retesting that 100 moving average aligned with that parallel channel that we originally had. And again, this is going to be another important zone for the temporary bulls to make sure that they support this. If not, I do expect us coming down further as that impulsive scenario. Now, another troubling thing is that we haven't retested even the 20 moving average on the weekly chart just until that breakout happened. So we briefly consolidated, and then we didn't even retouch that line, and we just went up as a major fake out. So this is one thing to make sure to take into consideration. Maybe this is the first time we're actually going to retest this. If we do break below it, then that's something that we have to consider. But again, during trending markets, like I said, during the bear market, it acted as resistance, and maybe so this may act as support of some kind, at least for the temporary time being. Nothing to talk about too much on the week or monthly time frame. We haven't even come down retesting the monthly 20 moving average. It's way down at 35K, and I expect that to come up if we do consolidate. Maybe if we do go back into that bearish scenario, we're still going to get some temporary support around the 45 to the 50K regions. So hopefully that was helpful, ladies and gentlemen. I've tried my best to organize all of the scenarios. Hopefully you can build your own thesis around that. Again, if you're not following me on social media at X, formerly known as Twitter, at XForce Global, please do give me a follow. I do a lot of my daily updates there. If you want even more daily analysis, including altcoins, please do join me at the membership group only. X4 Discord membership is in the link in the description below. Thank you very much for joining me today. I'll see you guys in the next video. Bye bye.